Hey, good afternoon, everyone. Welcome back to another bar by bar analysis here on my channel. Today is May 5th, 2022, and today we're looking at a 2000 tick chart for the E-mini S&P 500 futures market. The only indicators that I like using are a 21 EMA here in blue, 200 EMA here in magenta. We primarily focus on price action, overall context of the market in order to place our trades. Now, today is a fairly special video. I want to continue developing a strategy that works on a consistent basis. Now, that's the secret to the market. The secret to getting good at trading the market is trading a set of rules that keep you consistently profitable. So, whatever method that is, whether you like trading second entry shorts and longs, higher lows, failures, whatever methods that you like trading, if you're making money doing it, continue doing the same thing because consistency is what's going to keep you profitable. If you're consistently doing something or trading a method that isn't making you money, why are you going to continue trading that strategy? You want to trade a strategy that makes logical sense to you and that works on a consistent basis so that you are profitable. That's it. That's the secret to the market. No matter what you're trading, whether it be stocks, options, forex, futures, commodities, securities, literally it doesn't matter. The secret to winning this game and winning the market is just trading a set of rules that keep you consistently profitable. So that's really what I want to continue developing with this catching stop strategy that I've been trading. Now, I'm still not done trading second entry longs or shorts, but I do want to approach them a little bit differently now because what I've found is that they haven't been as reliable as I wish they were. And again, that's just for me. That's how I've found them. But if they're working for you, continue to do them. If you're making money doing it, just don't change anything. But anyway, let's get into the market today. We're going to talk through some trades. I think this is going to be a very good video today, so just watch it through to the end. As we normally do on this channel, we have a level of resistance here at the top for overnight highs, level of support down here for overnight lows. And as the market opens, it seems like we could have a potential downtrend today because immediately these overnight lows aren't being respected. We're pushing down. So prices are pushing down. We have a short-term trend that's working up with a break move to new high. No second entry short opportunity, but prices come up one more time to test the EMA. We're at a key entry point. I saw this lower high opportunity, nice bearish bar. I think a somewhat similar setup to yesterday, a lower high that I ended up losing. I got into this trade and was stopped out, unfortunately. So that's just part of the game. Let's continue on. EMA kind of flattens out a little bit before they test these overnight lows again and immediately get rejected. Strong push below EMA. So we have the short-term trend that's working down, but it's somewhat new. We have a lot of bearish pressure here. So as prices come down, we have a new high. First entry long, second entry long that triggers above this bar, but I'm not looking to go long. What I was looking to do is catch the stops. So I had my order one tick below this signal bar. Prices kind of chopped along a little bit before they got me into the trade and out fairly quickly. Now, I might need to make an entire new video about this, but I really want to adjust the risk reward. I want to adjust where I'm putting my stops based on how the market's trending, depending on where we're at in the market. So at least what I'm trying right now is if we are trending in a certain direction and I place my stop one tick below this signal bar, if the trade is going to work, it's going to work right away because you're trapping people. Prices should flush. If they don't flush down, I want to get out of this trade right away. I don't want to stay in this trade when we're in a trending market like this. So a strategy right now, at least that I'm trying is, and I'm trying to do a 2-to-1 risk reward ratio. So what that means is I'm going for 2 points and I'm risking 1 point because again, I'm expecting prices to flush down through my stop order here. I'm expecting for prices to flush, for me to get in and out of the order real quick. So the stop is relatively smaller, but it shouldn't be a problem because if it's a good trade, you should get flushed right away and get in and out of the trade really quick. So 2-to-1 risk reward. Now, as prices continue trending down, we have to widen the channel just a little bit to accommodate price action. So prices are pushing down. Now, what do we have here? We have the new swing up here with the first entry long prices come down, second entry long trigger above this bar. I had an order ready, but as prices push back up to the EMA, I wasn't necessarily interested in trading this. Now we have to figure out rules here. When are we going to pull our order from entering one tick below? Right? How far do prices have to move? And so I was kind of thinking about it today, and I was thinking if prices at any point close above the EMA, I'm taking my order out. I hope that makes sense. So if we see this, I have my order one tick below, I'm ready to get in, prices are pushing up. If we had bars that closed above EMA, I'm taking my order out, I'm not entering this trade. But prices don't close above EMA, they hold at the EMA, prices come down, you're in this trade, and you would have gotten stopped out here. So what's something that we can think about why this wouldn't necessarily be a good trade to enter? Or is it a good trade to enter? It's something we need to be taking a risk on. It just depends on the rules that we define. So one of those rules I kind of established today is if there's any prices that close above the EMA, I'm taking my order out. Now, could another rule be, if we have 3, 4 bullish bars, do we take our order out, right? They're just some things to consider, but there are things that we do need to talk about with that. Now, for those that like entering second entry shorts, second entry longs, this is the way I want to approach them now. So yes, we have a short-term trend working up with a break, move to a new high, nice bearish bar. What I've found is that when the next bar prints and it triggers a second entry short, it doesn't flush down right away. Sometimes there's a little bit of retracement. It comes back. You'll see the wick. Prices come back up a little bit and then come down again. So I think the way that I want to do second entry shorts, second entry longs is wait for an initial trigger to take place. Then when prices retrace, I put my stop limit order one tick below the signal bar. And when prices come back down a second time, that's further confirmation I get into the trade and I'd get out for the scalp. And I feel like the same stop loss strategy that I was practicing over here could be used here as well. You wait for that second push, that second confirmation, and go for a 2-to-1 risk reward. So you're going for 2 points, you're risking 1 point or 4 ticks. And if it's a good trade, it's going to work out, it's going to flush. So we're not necessarily at the EMA here, so it's an aggressive trade, but I just want to throw that out there. Another example, not too much farther later, you have a trend working up, new low first entry short, second entry short. Wait for prices to dip first. They'll come back up, and then when they flush a second time, enter second entry short there with the risk reward 2-to-1. I think that's a safer way to enter these now. We have a new high first entry long, second entry long, next bar prints, traps everyone trying to go long. I had my stop order ready one tick below the signal bar, ready to go, and prices continued up above EMA, so I took my order out. Prices make a new high here, first entry long, second entry long, if there's a trigger above this bar, and if there is, I'm putting my stop one tick below the signal bar. Next bar prints, and this is the rule that I'm talking about. So I have my stop order in place one tick below this signal bar. The next bar prints and we get a close just above EMA. We need to be taking our orders out. We cannot try entering this at this point. Once we get a close above that EMA, we're done. If prices had come up and then they close down below the EMA, we keep our order in, because look what ends up happening. You would have been in this, if you kept your order here, prices came down, would have got you in this trade and would have stopped you out. Prices would have came back up. That close above the EMA is telling you something. And I think as we analyze this strategy, we have to be very selective about our trades based on the set of rules that we establish for ourselves. Now, prices end up flushing. It ends up working out, but I think prices needed just a little bit more time to gather some orders so that we get that momentum that we need. So I hope that makes sense for people. I'm going to mark it just so that people can remember where we talked about that. Now, prices really are continuing down. We have this short-term trend that's slowly working up here with a slight break, move to a new high, new low first entry short, second entry short opportunity here at EMA. Let's utilize the same strategy. You'll see what happens. Next bar triggers the second entry short, prices reverse back up. Wait for the second flush to put your stop limit order in. Don't do it right off the bat. Do it the second time around. Prices come down, triggers second entry long, they retrace, come back up. As they're coming back up, that's when you put your limit in, and then when prices come back down, you're in and out of that trade real quick, utilizing that 2-to-1 risk reward ratio that we talked about earlier. When we do it like this, we expose ourselves to less risk, and you're less likely to get trapped as well, because if you took a second entry short, prices trigger and then retrace and never look back, prices continue up, well, you wouldn't be in that trade anyway. So if you're looking for game-changing ways to change your strategy in a positive way, try it. All right, prices are continuing down here. We have a new high of the swing. First entry long, second entry long if there's a trigger above this bar, and there is, prices trigger up for a second entry long. Now the indicator isn't showing it, but again, the indicator will only show so much. You have to be able to count these swings yourself. So I had stop limit order one tick below the signal bar, And as prices come down, you're in this trade and prices flush down for the scalp. There are people that are trying to go long, trying to pick a bottom. Let's help them out of their trades one tick below that signal bar. So as this trend is working down, you have a break, move to a new low. Prices come to test the EMA one more time and they come back down. This is where I started thinking we could be in a potential trading range. We had a break, move to a new extreme, and now we're dealing with some consolidation. So potentially you have something like this. You have a new low down here with a first entry short, prices come up, second entry short off a level of resistance. You have room to the EMA. You know, if you feel comfortable with that sort of strategy, you have room to the EMA, you could take that. I personally didn't, but the trade works out for the scalp with that room to the EMA. We have a new high, first entry long, second entry long. At the top of this resistance here, I had my stop limit order in place to catch the stops, but prices continued up and it wasn't an issue. And additionally, you know, with the rules that we have now, I'd probably take my order out because we had to close above EMA. But prices find this high and then push back down below EMA. New low, first entry short, second entry short, but you would be going short into the bottom of this range. I personally didn't like this trade. You do have room to the lows, I guess, but in the moment, I had this trading range at play. After this big downtrend played out, I thought we were going to be consolidating for a little bit. I didn't want to take this risk, but you know, it's a second entry short. If you were going to take this chance, at least wait for the trigger, wait for prices to retrace, and then put your stop limit order, and then you'd catch that scalp. And I think this one actually turned into a phenomenal runner. And as we form new lows, we have to extend our trading range here to accommodate price action. I'm trying not to let it get too cluttered, but we had this big downtrend with a break, move to a new extreme. So this downtrend has essentially played out. And there weren't any trades to take in here. I wasn't interested in taking the second entry short. I wasn't interested in catching any stops. Then as prices continued along here, we had this new high with a first entry long, second entry long that fails. Now before this bar printed, this is what I saw. And I wanted to catch stops one tick below this signal bar. Now, again, I had the same strategy in place from the very beginning, a 2-to-1 risk reward. So my stop loss was literally 4 ticks. It was 1 point. And what happened with this bar is prices came up first and then came down, got me into the trade, came back up and stopped me out before prices went exactly where I thought they were going to go. So I had the right idea here, but again, I just have to fine tune my stop loss strategy depending on the type of market we're in. If we're trending, it makes sense to do a 2-to-1 like that, where you expect prices to flush down and get you in and out of the trade quick. But when you're in a trading range, like we're in here, prices may not flush as easily. Sometimes there might have to be some orders that come in to build that momentum to ride the prices down. And that's what happened here. I got sucked into the trade, but prices needed a little bit more momentum. They come back to get some buyers in, and then it flushes down. So I think when we're dealing in these trading ranges, that's where we might have to change our stop loss strategy just a little bit and do the ATR times 3, ATR times 4, just to give ourselves a little bit more breathing room. But yeah, I mean, it makes sense. We have to adapt to the market. If we're in a trending market, we have to treat rules differently than when we're in a trading range. We have to respect market volatility, for example. So that's why we multiply our stop loss times 4 or times 3 of the ATR, whatever you're comfortable with. We need to try and continue to figure this out. But, you know, that was an unfortunate loss based on the strategy, but I had such a tight stop loss, I didn't give it room to breathe when it was in this trading range. The prices continue along a little bit, and for you second entry long lovers, right, you have to draw the channel that's in play. You have a new high, first entry long, second entry long if there's a trigger above this bar. Next bar prints, it gets people sucked into this trade, and then prices reverse. Now for me, I've just noticed the second entry longs are not as reliable as I wish they were. And so literally all I did was put my stop limit order one tick below where people have their stops. And as prices came back down, I was in and out of that trade super quick, just buying people's mistakes. And we have to be realistic. How are you drawing this channel? Are you drawing it like this? Or are you trying to convince yourself that maybe the channel looks more like this? And we had prices that were moving up and now we have a break and you have a short-term trend at play, right? Like we have to be very honest and careful about how we're analyzing the market. We can't cherry pick. We have to be able to see the market for what it is. So if the channel is like this, it starts from the low and it's finding support at the EMA, right? There's 2 key entry points here. New high, first entry long, second entry long. But you know what keeps you out of this trade? Exactly what I mentioned before. If you wait for prices to trigger first and then come back down, you put your stop limit order in place to go long, prices will come back and fill you, but you never get filled, right? Because with that strategy, you wait for the first trigger, prices come back, you have your order ready, but then prices continue down. You stay out of that second entry long. That's why I think it's really important. Try changing your tactic. How are you entering your second entry longs and shorts and higher lows, higher lower highs, all that? But as the 200 EMA comes down, prices again are pushing strongly below the EMA, a very bearish bias. We have the new swing up here. Prices come up for a first entry long. Prices come down and then up again for a second entry long. People trying to go long above this bearish bar. Where are people putting their stops? Probably below the swing. This one might be a little bit aggressive. You might be able to enter below this bar. And as prices come down here, you're in and out for the flush. You get that scalp. Now the only hesitancy that I have there is you have prices working down in a channel. You'd be going short directly into the bottom of this channel. But then again, are you really? You're letting prices play out just a little bit. It's finding a little bit of support before falling through. So you're not necessarily entering right here in this moment of time. You're entering in this moment of time after prices have played out a little bit. So maybe this trade is more okay, but that's just how I'm seeing it. Now it's kind of hard. Prices do get somewhat sloppy here. No way to catch any stops here that I can see. After prices travel around a little bit, you have a new high with the first entry long, second entry long. I had an order ready to catch. Didn't get it. As prices come back up, you get a close below EMA. You're taking your order out of there, right? The prices have moved already too far. Closed above EMA. Don't expect for prices to come back down. Now what we do have here though is a new low, first entry short, second entry short trigger below this bullish bar, where people putting their stops one tick above this signal bar. Trade the failure. Enter one tick above that. You should be in and out of that trade super quick as prices come back up. You also have the short-term trend at play here. So people are trying to short directly into the short-term trend line and prices just continue up. Now, as prices continue chopping along the EMA, you have a new high, first entry long, second entry long that fails. I wouldn't try taking a short here. I don't want to try taking the failure here, I should say. You do have a little bit of room to the EMA, but these are just one of those rules. I need more space to the EMA. I don't want to be trading like that when we are fighting against prices that are pushing up bullishly as well as the EMA is pushing up as well. So it works, don't get me wrong, but let's try and be selective with the trades we're taking. And prices continue to chop along here a little bit. I was finished trading by this time of the day, so that was it for me today, but ultimately, great day of learning. I really, refining the strategies that I have a little bit, really focusing on getting some rules nailed down that I can follow, and I want to try and keep that consistently profitable. So maybe a few things that need to be tweaked a little bit, but ultimately I felt it was a very productive trading day, and I'm happy with the progress that I made today. Prices never came back up to test these overnight lows, but yeah, pretty strong bearish day. But that's it for today's video. If you like this video, please like, subscribe, turn on post notifications so you know exactly when I post this content. And please leave a comment. I love reading the comments. I'm not right about everything. I want to continue growing and learning. This is an opportunity for me as well. But I truly appreciate all the support I'm getting on these videos. You guys are awesome. I hope that you guys found this video beneficial. Tomorrow's Friday. I most likely won't be able to post a video tomorrow, but I'm definitely going to give it the effort. If not, have a great weekend. I will see you guys next week. As always, thanks for watching.